As a passive investor in alternative assets, you have the option to invest in specific deals, or you can invest in a fund that deploys money into many different deals. Today, I'm going to take a few minutes to talk about each so that you can decide which is right for you. When I started to invest in alternative assets, I would always hear the term fund thrown around, but I wasn't sure how that differed from the deal-specific investments I was already making. A fund, I later learned, is a way to get exposure to many individual deals with one investment, as opposed to deal-specific syndications where the sponsor has already identified the asset or assets that they're purchasing. So if we take multifamily properties as an example, the sponsor can either raise money from their investors to purchase the property that they already have under contract, or open a fund where they raise a large amount of money for the purpose of buying properties in the future. There's pros and cons to each of these, so let's dive in and figure out which makes most sense for you. Let's focus on funds to start. The great thing about funds is that your dollars are going to be diversified across several different assets, which can help lead to less volatility in your portfolio. The assets could be located in different geographies and have different business plans. Perhaps some are Class A stabilized properties and others are Class C value add opportunities. If one of those ends up generating a 30% return and another's at a 5% return, you're getting a blended average of these instead of the possibility of being on the losing side of the coin in one specific deal. Another great part about funds is that the operator has the capital ready to go and can deploy it quickly. This may allow them to jump on opportunities faster with no risk of falling short on funding. And depending on how big the fund is that you're investing in, the operator could also have buying power by making all cash offers and have a competitive advantage. Keep in mind though that having the capital ready to deploy could actually be seen as a negative. If the sponsor has an open fund and they've raised $10 or $20 million and they're just not finding great deals to invest in, the clock's ticking because their investors are wanting to see returns on that money, which then puts pressure on the operator to get the capital deployed. One way to avoid this is on the front end, be sure to ask the operator if they've done funds in the past and what their deal flow looks like. That way you can determine if there's a good chance your capital will be invested in a timely manner. When you invest in a fund, you're really betting on the sponsor and their track record. There has to be a lot of trust there because you won't be seeing the individual financials and business plan laid out for each specific asset that the fund acquires. If it's a completely blind fund, you may also not even know the market or asset type. This is the main case for deal-specific syndication investing. Not only can you do all of your due diligence on the operator, but you can vet out the market you're investing in as well as the financials and business plan being implemented on the deal itself. Personally, all of my multifamily investments have been made in specific assets because that's what I'm most comfortable with. For me, there's some peace of mind in knowing the property I have ownership interest in, as well as the market I feel good about. So to recap, funds can absolutely have merit if you're looking for more diversification, you're truly comfortable with the team you're placing the capital with, and you're confident that they can go deploy it on a timeline that you feel good about. Deal-specific investments, on the other hand, don't allow for as much diversification, but they do allow you to go deeper on the market and the property that your money is invested in. Based on the goals that you have as a passive investor, I'd love to talk further about which of these may be right for you. Leave a comment below or reach out to me directly at rule72equity.com. Talk to you soon.